we are going to be talking about common mistakes that SMEs make regarding tax. We know that this filing taxes is always an issue, especially for our small businesses. And so today we have brought a tax expert who is going to talk to us. But for those who attended last week, I also want to thank you very much for attending last week's session where we discussed business systems, a tool for success in your business. And we hosted Mr. Charles Ochichi, the Executive Director, Enterprise Uganda. And we promised that going forward, we are going to look at the specific pillars of business and look at business systems in finance, business systems in human resource, business systems in operations, business systems in marketing. And so that's what we are going to be running after this. But today we are bringing to you understanding, again, tax. What does it mean? What does it mean? What are the mistakes that we make as SMEs regarding filing taxes, but also how we structure our businesses? And so we brought a very, very good tax consultant who will speak to us. But before that, I want to welcome you all and to thank you for creating time to always come on board and acquire knowledge. We think that it's as our businesses recover from COVID, Enterprise Uganda deems it very important to give you weekly doses, a pill today, another pill next Thursday, and give you insights and tips on how you can strengthen your business, improve competitiveness, and be able to grow your business. And so I want to welcome all of you and to thank those who have signed up in the chat room. I see Mubarak Senyonjo, Semu Cleaning Services. I see Sylvia Naturinda. So let's register ourselves. I see Edward Obele, who says he's an audit manager with Edit Orieket and Associates. Pamela Tumusime from Lily Party Services, you're welcome this morning. Robert Seruma, welcome this morning from Renofin Limited Construction. Jackson Mutejechi from Prime Green Limited. Nice to see you. Welcome. Emmanuel Turiahebwa from Adenfield Certified Public Accountants. Welcome this morning. Welcome, James Odur from Stanbic Bank. Yes, Business Growth and Development Manager. So we have bankers here, we have certified public accountants, we have business people. And so the opportunity for networking is great, and I would like to urge us to continue networking. Nila Manzi, Director, Trinitel Limited Financial Services. Thanks for joining us this morning. Fred Kasirie from Caucasus University, Georgia, all the way from Georgia. You're welcome, Fred Kasirie. And we have Jubilee, we have somebody from Jubilee Insurance, that is Gerald Tuebuze. So ladies, this is amazing. All the partners you need to grow your business are on this forum, and I would want to urge you to go in there and make sure you're able to pick those that you want to continue networking with. James Babumba, good morning. Welcome, James Babumba from Fruit Solar Business. So he's into fruit processing. Jackie Tuonjire, Jabo Designs Bugolobi. Welcome, Jackie. And Nicholas Nsubuga. Good morning, members. Thank you for, that's from Aneno Shoe Print. Maureen Dahura, Ibanda Sylvia, CEO, Ibanda Community Organization Network. And so we have entrepreneurs from across the country. You may be wondering, how do I penetrate, say, Arua? We have entrepreneurs from Arua joining us this morning, from Ibanda, from across the globe. And so this is an amazing platform, and I'd like to thank you all for making this good choice to join us. And so I would then want to take the opportunity to before I introduce our presenter this morning, I wanted to just briefly make an announcement that for entrepreneurs here this morning, we are planning, Enterprise Uganda is planning to run an entrepreneurship training workshop. This is an internationally acclaimed training. It's a one-week training that we run. And this is for you entrepreneurs to give you to impart into you the behaviors that you require to succeed, to grow and succeed your business. So we'll be running this training between 7th and 11th of November in Kampala. And so we urge you to register. We will share with you the link so that you can sign up online, and it is a 1-week training. It will cost you only 100,000. So are you an entrepreneur? Or your spouse can join this, or your family, or your key managers? I would like to urge you to be able to sign up for this training. Yes. So with that announcement, once again, I am your moderator this morning, Rosemary Mutiable. I'm a director with Enterprise Uganda. I'm in charge of business advisory services. And so this morning I will be moderating, and I would like then to take this opportunity to go straight to introduce our speaker. Like I said, today we decided to bring on board a tax consultant, and that is Madam Pamela Ssaka. Pamela, are you online now?
Yes, I am. Thank you.
That you're on. Okay. All right. So nice to see you, Pamela. And so, ladies and gentlemen, today we are looking at understanding tax. And we brought one of the best, and that is Pamela Ssaka, who is she's a manager with BDO. BDO is a consulting firm, and she is a tax expert. She has over 9 years as a tax expert. She's also worked with Uganda Revenue Authority. So when we talk about issues of taxation, there's no better person than her. And so without wasting much time, I would like to then welcome Pamela. Pamela, you're welcome this morning. You have about, we have about maybe 30 to 45 minutes. Just take us through what are the basics that SMEs need to understand as they plan for their taxes, as they register their businesses. And then thereafter we shall have questions. But also as you present, we will have people will put in they will type their questions in the chat room. And then after your presentation, we'll then go into an interactive session where you respond to questions. And then we end the session by around 10:30. So over to you, Pamela, you're welcome.
Thank you very much, Rose. I'm very happy to be here. Good morning, everyone. It's a bright morning, and we're going to talk about tax. One of the topics people don't like to talk about. Derek, are my slides ready? Yes, so today we've talked about what is expected of us, and we all know a bit of the law and what the authority expects us to do. But I will talk about mistakes that I have seen SMEs make, both as an authority while I was working with the URA and as a consultant now with BDO. So I am happy to have both sides of the coin and the ability to relate with many of us on this call. So we'll move right in, Derek. I'll start with a quote from Ronald Reagan. He says, "We are going to close the unproductive tax loopholes that allow some of the truly wealthy to avoid paying their fair share in practice. They sometimes make it possible for millionaires to pay nothing, while a bus driver was paying 10% of his salary." And that's crazy. So do you think the millionaire ought to pay more in taxes than the bus driver or less? So that was Ronald Reagan. And this was in the US many years ago. The US was where we are today. And for me, when we talk about SMEs, I feel like this is the problem SMEs have presently in Uganda, because we see that big multinationals that are making much more money than most of the SMEs in Uganda are not paying a lot of tax. Their effective tax rate has been reduced. And that's because they've taken on tax consultants like myself, and they do a lot of tax planning, which an SME may not be able to do. So it's important that we minimize on the mistakes that we make, because even tax exemptions in place do not really favor the small players, but they favor the big shots. And SMEs are the blood bank, are the core. These are the guys who are moving our economy. So we need to make sure that they do not suffer when it comes to tax. Yeah, and this is why I'm going to tell us about the small things that we do that cost us in the long run. For starters, we SMEs in Uganda or maybe world over have, well, when you're starting a business, usually you have an idea, you start a business, and then 1 year down the road, it's not working, you close it. We don't even close them formally, like it doesn't go through the whole closure process. We just abandon it and open another one. So that really shows what a real SME is like in Uganda. And those are the people that I'll be talking to today. So some businesses are not formally registered. And how does that affect you from the tax perspective? If you have a company, Ssaka and Sons, and it's not even a company, you've not registered it, but you woke up one day and put up a poster, Ssaka and Company, Ssaka and Sons. You're doing business and everything is okay. If someone from URS, say if you accumulate taxes and URA is demanding a lot of money from you, you realize that they will come for you and everything that relates to you because you're one and the same with the business. And it's not registered, so they will take you to recover their money. But if you have a company in place, then there's a limited liability. And what does this mean? No one would come for your personal, maybe property, because the company and you are separate in law, So it is good for businesses to actually formally register. Then after we have, okay, now we've formally registered and we want to get a TIN. These days, URSB is big on TINs. Banks will not open an account unless you have a TIN. Everything is rotating around the national ID and the TIN. So when you get into, when you want to get a TIN, sometimes I have seen people are in a hurry and they want to get the TIN like yesterday. So they will put all the wrong details in there just to make sure that they get a TIN same day, which for me is setting you up in a trap in the long run. For example, we've seen people select real estate because they want to show oh, sorry about that. I don't know what's causing the echo.
No, but we can hear you. Pamela, we can hear you.
Is that better?
Yeah, go on.
Okay. So selecting a wrong business activity while getting your TIN. So many times you'll find someone putting, so URA is currently not allowing individuals to get TINs without a clear source of income. So you'll find people putting all sorts of things, business, property income, just so they get that TIN and get, and get that business that they want, open that account that they want to open. And for me, that sets you up in a trap. Because later, URA will start to send you reminders for you to file, because according to them, you're a business owner. And then I have found people telling me, but I don't even own a business, but URA keeps sending me these. It's because you registered your business wrong. The people who put rental income as a source of income on their TINs. But when URA comes to them, it's a problem because in all truth, they don't own rentals, but because they wanted to get a TIN, they went ahead to register as landlords. So you see those small mistakes come back to, and getting it off your TIN, proving to URA that you're actually not a landlord, but are an employee, is going to be so hard because they'll think you want to just avoid paying taxes altogether. Then the other thing that I have seen is we do not separate shareholders and directors. Now, directors for tax purposes are employees of the company. So we have seen people opening companies, they put their children, their wives. Meanwhile, these people are not even in the strategy. They're not playing any strategy role, no operational roles, but they're really just business owners. But they go ahead and register these as directors as well for tax purposes. So you will find URA will not give you some of its services like tax clearance certificates if these directors are not filing their returns. So you find your wife is really a home mom. She's not earning anything from this business, but URA will be like, it's not possible that a director is not earning, and it will frustrate you. Why? Because at the point of registration, you did not think through this process. You didn't think through what the repercussions are. Then we don't record our costs at all. We simply dive in, you pay a small amount to the lawyer, you pay up all these guys, but you're not recording anywhere. And that for me is also a very big problem because you would never know if you're making a profit. Many people live on they don't know if the business is profitable. As long as they can afford to pay school fees from the Nssf, they do not know if they are eating into their capital. Let's move on. So in Uganda, everyone who is employed, everyone who is earning a small income is required to pay tax. And that is for all of us, employees, business owners, shareholders. So, and when it comes to these taxes, income taxes you pay on money that you get, timeliness is key. Like, time is everything. There are timelines in the law that you are required to follow. And if you do not follow these, there are penalties and huge penalties. For example, when we talk about income tax, many of us have the default year end of 30th June, and that is when we are supposed to file. We are supposed to file our final return, the return that shows how the previous year went, by the 31st of December. But many of us do not even remember these timelines. And this means that if you file it late, if you notify URA late of your affairs, then they will penalize you at 200,000 per month. The return is late. So you can imagine if the return is late for, say, a year, and say there's an objection in there, you will have to object, and then you will have that penalty. Sometimes you didn't make money, so they will accept the objection, but you will have to pay the penalties. So it becomes very, very costly for the business. Then some of us, that provision, we file a provisional return within the first 6 months of the year, and we are allowed to amend it by the 30th of June of that year. So what that means is that by 30th of June, you know how your company has been performing. You know an estimate, at least 90% estimate of what you expect to have earned in that year. But when we forget so for example, you filed as zero return in the first 6 months because you didn't expect to make money, and then you got a big deal in the second half of the year, and you you didn't amend that return. So you come in your final return, file properly your income, URA will be like, no, because you lied to us that you're not going to make money and you have made 100 million, we are going to penalize you at 20% for not telling us the truth, because we've given you up to 30th June. So you can see how punitive it is. And it's really small things. Missing a deadline is not okay. And you can't amend that return after the 30th. Then there is another problem with directors. So usually directors have, of course, they're probably employed somewhere, they have a company somewhere, and that company, they are on the board of a certain company X, and all those people are paying them money. So by their nature, they are supposed to file returns. So the provisional comes and they file only the incomes they expect and forget their employment income. So what does that mean? That means that at the end of the year, you are going to put in all your incomes, including your employment income. And that would mean that you have an under provisional by default. Yeah. So that is a problem I also found with people when I was still an officer at the URA. Then many of us purchase from, we don't vet our suppliers. So we purchase from suppliers without TIN. And for me, this is really a gap. And I hope that after this call, you start to vet who your suppliers are, because the law does not, will not allow you to deduct an amount of more than 5 million to a taxpayer, to a supplier, pay to a supplier without a TIN. Now, what does that mean? That means that if you have a furniture person, you have cleaners, and you're paying a food person, and you're paying these people in the tunes of 6 million, 5.5, and these people don't have TIN, they're really operating under the cover. It is you who will pay this tax. So I think that's what even explains why companies are big on tax clearance certificates, because that is when they confirm that we are dealing with a legit person. Directors in companies are paid money. Sometimes it's a loan, sometimes it's sometimes they are dividends. So depending on the nature of the payments, for example, if it's a loan, it would have to be accounted for in the director's pay as you earn for the company, because that would be an advance on the side of the director. So you need to account for all these drawings. But what happens is we simply get money from, we treat the business as the same entity. We treat that ourselves and the business as one and the same, which is not okay. And that also becomes a problem. Then because we treat the business as one and the same with the owner, when we lend money to our business, we don't even write down anywhere. So URA is having a problem with people who give loans, because you're giving money to one entity, whether it's interest-free, whether, it depends on the terms that you agree on, but there's need to have an agreement in place at all times when you receive money from a director or a shareholder. Many of us are importers, and when we import goods, we do not, we kind of believe that we are under cover, so we don't declare this in our income tax return. So you'll find a big time importer who is filing a presumptive return. Honestly, URA has this information already, but when you're filing your return, you want to convince them that you are a small business, but you're importing things in millions, in hundreds of millions. That there is a gap. So when URA assesses you, I hear many people say, I think someone is following me, but no, this information, URA has it. So the earlier you know that URA has this information, the better for all of us. The next slide, Derek. Then there's taxes that we pay because we are paying someone, and these are the withholding taxes. Our biggest mistake is not filing returns. We are supposed to file returns for withholding tax. Also, many of us do not follow the press, and some of us, because we have wrong, details on our TINs, we don't even receive emails from URA. Some of us receive them, but we just even forward them to our consultants. And what does that mean? You will not get to know that URA has made some changes onto your TIN. For example, this year, URA designated another 900 taxpayers as withholding agents. What does that mean? That you should withhold on all your supply, or on all your suppliers at the point of payment. If in aggregate, you're paying them more than 1 million shillings. So for me, this is really an information gap, because I have found very many people do not even know what is required of them. So just to break it down for you, if you are a withholding agent, if you go to a supermarket and that supermarket is not exempted from withholding tax, you are supposed to actually pay them less 6%, because by law, you are required to remit that 6%. If you don't, the burden will be put on you to pay that money. Then many of us pay professionals like myself, and we do not withhold. Yeah, so as long as a professional is not withholding tax exempt, you are supposed to withhold from them at 6%. If you don't, and then you have all these very good looking audit expenses, 5 million in your accounts, URA is going to tax you at 6%. So you need to look out for that. People import services in form of systems. Someone is using a system that is managed from another country X, and that's an imported service. If you are paying for that service, you are supposed to withhold as stipulated in the laws. And Uganda has double tax agreements with 9 countries, and it would be good that we school ourselves on these countries. What are the benefits in these double tax treaties, so that we take advantage of them as SMEs. Many of us buy property, but if someone has been using this property for business, you are required by law to withhold at 6%. Unfortunately, when at the point of paying stamp duty, you will not differentiate whether this was commercial or not. So when URA comes, they will be like, we see you bought property from person Y at, say, 300 million, but we do not see the withholding tax that you didn't account for withholding tax. Meanwhile, at this point, the person you bought from has already eaten the money. You can't even get it back, because even the contract you signed was, give me my 300 million, you take the property. So what does that mean? That means that you are going to suffer that tax. So, and that's not fair on you. You would need to understand that. Then there's also, because URA cannot tell that this is a business property and this was residential, we have seen them coming to taxpayers who have bought land, residential property, really, where someone was staying in it, and because people do not know their right, they have ended up paying these taxes because the authority has said. Moving on, we have taxes that we pay because we are employed. And as an employer, as an SME, I assume that we are all employing 1 or 2 people, or even yourselves if it's a one-person business. So you need to file pay as you earn for the money that you earn per month. And this has to be done timely. Now, for all these monthly taxes, withholding tax, pay as you earn, VAT, we are required to withhold, to file the return, notify URA by the 15th of the next month. So many of us forget, and it is a problem, because for VAT, for every month that you're late, you pay 200,000. That's a lot of money. Then we are not paying our taxes in time. I had a conversation with one of my colleagues, one of my friends, and you know, the PRN that is issued by URA gives you 21 days in which to pay. So according to them, those 21 days were the due date for payment. Members, the due date for payment of all these monthly taxes is the 15th. So if you pay 1 minute past the 15th, you will get that 2% penalty. Yeah. So if you file, there's a time I was filing a return and it was the last day. So you know that process of uploading, I started uploading it like at say 11:58. By the time it was uploaded, it was, I think, a microsecond past midnight. Believe you me, we had to pay the 200,000. So that is how important timelines are. So let's track our payroll costs, people. Let's track them. Let's put them down. Let's have contracts. So many of us are claiming employment costs in our income tax, but we do not see this pay as you earn accounted for. And URA is thinking, yeah, you have 20 million in employment costs as a deduction in your income tax, but we don't see you accounting for this money. And you see, that's when URA now will backdate your registration and assess you for the period. And we've seen that URA is quite aggressive lately, and I feel like this presentation has come timely. So it is important that we listen, take notes, re-listen to this recording so that we don't make these mistakes, as we would want to see our businesses grow and see our businesses live after maybe 10th birthday and all. Then there's the local service tax that is paid by all gainfully employed persons. So if you're paying your people 1 million and above, you should be paying local service tax. And this local service tax is paid in the first quarter of the year, the first 4 months of the year, and it's 100,000. Usually it is paid, people pay it in installments of 25, just to spread the burden on their employees. Now, Nssf is the other, I don't know, problem, because in 2021, the Nssf Act was amended, and everyone who pays employees is supposed to account for this contribution to the fund. Before it was if you're employing less than 5 employees, more than 5 employees, but now even if you have 1 employee, you're supposed to account for Nssf. And that's a total of 15%, 5 for the employee, 10 for the company, and this is supposed to be remitted still as you remit your pay as you earn. I hope when it comes to these 3 areas that I have discussed so far, we are clear and are taking notes. Now there's VAT. Most of us are within the VAT threshold. So because you're a business owner, you're really not keeping track of how you're busy making the sales, getting the money, but we have, but in due course, you hit the threshold of 150 million. So when you hit the threshold of 150 million, URA expects you to register for VAT. If you are dealing in taxable supplies, so at the mark of 150 million, you're expected to file and register for VAT, but many of us do not register. So what happens? When URA later finds out, that could be after many years, they'll be like, Pamela, you are supposed to have filed your VAT returns in you are supposed to have registered for VAT in 2018. But we see you're not even on the register. What does that mean? They will take you back because remember, people who have been getting your services, paying you, want to claim that have been putting you in their system. So now, and for you, you've not been charging. So what does that mean? That means that if you supplied goods worth 200 million and you did not charge VAT, but you were supposed to, URA will consider that amount to be inclusive of VAT. So you see how you start eating into your profits because you're not complying. And just like withholding tax, income tax withholding, we have VAT withholding. Now, some people were designated. Again, it is important that we check the lists on the URA portal to confirm if we are designated agents. Now, these people are supposed to deduct 6% of the VAT paid to their suppliers. And for those of us who are not VAT registered, but have a contract that reflects that you will hit the threshold. I have seen that in practice, these big companies that are designated have been deducting this money. So when they deduct that money, that's an indicator to URA that, oh, this person should be registered for VAT because they're supplying to in big quantities to XYZ. And for me, that third-party information is something we need to take very, very seriously. Then there's the Ifri system. URA introduced the Ifri system for all VAT registered clients. But what I have seen, a mistake I have seen people make is they will invoice some through Ifris and then some out of Ifris. Now, what URA is also doing, they are mystery shopping. URA has a budget for this Ifri system. So what they do, they come to you as customers and expect a receipt. If you don't give them a receipt, but you're charging VAT and you're VAT registered, so URA is going to the bars, it is going to supermarkets, it is going to even like people's businesses. And once you give them a non-Ifris invoice, that is where problems start. Because it is so punitive, the penalty is 6 million. Or you pay, I think, twice the tax that you should have paid. So you can imagine if you're trying to dodge taxes on a water bottle of say 2,000 shillings, and then URA fines you. The penalty of 6 million is so many bottles, probably your entire business. And this is money that you will pay. Again, still when it comes to Ifris, and I'll talk about something very interesting. When we import goods at the border, you realize that these days URA gives us an Ifris invoice. What does that mean? That means that the goods that they have verified at the border have been input onto your tin as stock. So when they input this as stock, it means, so now I have seen very interesting scenarios where people declare, say, mosquito nets instead of, say, cutlery, because they want to take advantage of a certain regime. So at the end of that day, URA will put your mosquito nets in the system, and then they will come back to you. URA is doing spot checks. So they just come random day, they don't warn you and tell you, oh, we want to count your stock. Now imagine you declared mosquito nets instead of cutlery. That is when you will look for the mosquito nets. Because at that point, they will tax you heavily on all those quantities and penalize you. Then it's also important to keep our stores in order and to know and to also alert our storekeepers that at the point when URA comes, please give them the information because they have it. And they come with information just to verify with you what you have on ground. I have had many audits. I can't emphasize this enough. I've had many audits where there's been variances in stock taken and stock in Ifris. Now that's because sometimes you want to sell off the system, then you're selling on the system, then at the end of the day, you don't even have good books you're not keeping proper books, and you see how the katogo keeps mixing. So please, let's ensure that we have this done to avoid these penalties, because it will not be good for your business. Many of us are in the bracket that can use cash accounting option for VAT, for declaring VAT, but we are not using it because either we don't know or we've not been advised. And for me, cash flow is is very important for an SME. So it's important that you explore, like activate your right to use the cash accounting option. Why would you use accrual method when your customers are not paying you in time, honestly, when you have an opportunity to use the cash accounting option? Then some of us deal in both exempt and non-exempt supplies. But we claim everything, all the input, when we are filing our returns, which is wrong, because exempt supplies, when it comes to exempt supplies, you can't claim the input on them. So what URA does is it allows you to apportion. If you're dealing in both, it allows you to apportion and say, okay, you can claim a certain percentage X from your from the input, because so that it's fair. Now the other is we file our VAT returns very well, because it's a month on month and it's real-time information. So when we come to income tax, sometimes we do. Sometimes people actually file presumptive, which I find very wrong. And then sometimes we file, say you have VAT returns, and over time, the records in your VAT returns show that you have made sales of say 500 million. But because at the end of the year, you're thinking, I can't give these people all this money. You declare 100 million. You declare 100 million. URA already has in your own information that you have sold 500 million. So, and now there's even the tax procedure code has been amended, and it's really, really punitive for things like those where you give URA misleading information. You're going to be penalized, and heavily. So let's keep our records in place. Let's align our records. Let's make sure that everything is in order. Let's have proper accounts. And then there's customs. Customs, first of all, many of us are using unregistered customs agents. That is very wrong. Because these people are not even liable, so they can put for you your mosquito nets and get off the radar. They are not. Sometimes they are not even employees of the companies they are using. So approach the company that is actually your customs agent and find out what is it, a hit and run? Are they do they even have quality assurance systems in place? Because things like under declaration of taxes, they will hit both of you, both the agent, the registered agent, and the client. Misclassification of goods for tax purposes will also hit both of you. So for me, getting good guidance from a qualified consultant that is authorized by URA to do this work is very important. Also, before I forget, it's important to know that URA is not allowing anyone who is not an agent to represent you, say for objections or within an audit. So it's important that you get in touch with consultants that are actually recognized, that have passed through the test of URA. Next slide. So as an SME, I would understand when you get into a contract with a big company, you're excited, you're really just looking at the money you're getting out of this. Have you read the tax clauses in there? Have you tried to understand how the contract has been structured? Is it to your advantage legally? So it doesn't hurt to get, say, a tax consultant or your lawyer to look at it and advise that, oh, okay, you're getting into this supply, but there's this. Or do you know that for this supply, you can get this exemption? For example, if you're a contractor of an aid-funded project, you're allowed to have a VAT exemption, but people are suffering silently and paying this VAT because they don't want to use the services of a person who specializes in a particular, but let it be, it could be electricals, it could be, it pays to use someone who understands their trade. Contracting with unregistered tax agents, I can't emphasize that enough. And then now we talk about stamp duty. When sometimes direct shareholders give money, but they don't want to call this money a loan. They want to call it capital. So, but then they don't complete the paperwork because at that moment they do not want to pay taxes. What does that mean? That means that you will file your return and your share capital has increased from 1 million to say 100 million because that's the money you wanted to inject into your company. And then they'll be like, okay, we see a 99 million increase. What happened? You didn't pay that stamp duty. Are you hiding your sales? So that alone can spark off an audit. So when you introduce money into your company as capital, please go ahead and register it formally, pay the taxes due on it, and no one will bother you. Like URA will see it in their system. Moving on. But the biggest mistake that we make is not asking for help, people. Not asking. It could even be one of those, what do people call it? I think T consultancies. Yeah, but ask for help, like just talk about it. Give the scenario to someone who is knowledgeable and let them advise you. So what can we do? What can we do to make this better for all of us? Of course, I have mentioned, hire a professional, then have them review your accounts over a period of time. Say 3 years, call them in. Hey, am I doing things well? Have I paid all my taxes? And this helps because currently URA has a voluntary disclosure window whereby if you go to them and tell them, you know what, I was looking at my books and I noticed that I didn't pay this tax. I was supposed to pay it in 2018. They will actually waive the penalties and the interest. So let's utilize that window. Then many times our books, for some of us who do audits, the audit is not ready and we can't file. Honestly, we can't file our return by the due date. URA allows you to ask for extension. So you can ask for extension and give them a time you expect to be done and to file your return. These extensions, just follow it up. These extensions are your right. And if you have good reason, I don't think an officer can refuse to approve it. But it's important to note that when they give you an extension for filing, they do not give you an extension for payment. So it's better that you pay the estimated tax within the deadline period and then file when you're ready. Because if you pay when you file later, you're going to be taxed. You're going to be penalized for late payment. And that is 2% per month. Guys, that is 24%. I don't know what the bank rate is right now, but this is 2% per month for every month that payment is late. Many times we want to import something, but we don't know how is it treated. Does it even have any exemptions at importation? Does it have any? So it is URA has for customs, it has the trade department, and for domestic taxes and even customs. Sometimes there's a business policy department that is there to guide you on your transactions. So ask. Write to them and ask, they will respond. And for me, that response is very important because you are going to carry out your transaction based on advice of the authority. So when the authority comes out later, and this has also been decided, these cases where URA has come back to turn against the taxpayer, but if URA has given a ruling, at least the last, I think the MCOPA case, they can't come back to haunt you after they've advised you on how to carry out your transaction. Guys, please comply with Ifri's and digital tax stamps obligations. The penalties are high. You do not want to have your business penalized, because sometimes it's not good. It's not good. Then keep track of changes in the tax regimes. Now, it's important. Some people here, many taxpayers, many SMEs are using the tax law of, say, someone bought the tax laws of 2015 and they're using that. You people, the tax laws have changed. They change every year. Every other minister stands there while they're reading the budget and reads some amendments. For example, like the rental taxation has changed, I think has three tax treatments has been amended 3 times in 3 years. So imagine if you're still looking at the initial one, how you would be misled. So it's important to keep track. And the beautiful thing is, after this call, I'll get all your emails from Mr. Mukasa and include them in the BDO database. So you'll be able to receive these updates because BDO does that a lot. We make sure that you receive updates and in time, and these updates are actually explained for you to understand. So take advantage of this, and yeah, I am sure this is going to be very good for all of you. Many times we have people, sometimes you have a big tax liability and you can't pay because, like I said, our biggest asset is our cash flows. It is your right to ask for installment payments from URA. And we have seen people get these. This is an easy process. You can even do it yourself. So don't go to money lenders. getting money just to, you know, sort out a tax issue when you can ask for exemptions and pay for installments and pay in bits of, say, 4 months. Then take advantage of the exemption regimes. Some of us have tried to be compliant, and we have, you know, we're in good books with the URA, but we're not taking advantage of the withholding tax exemptions. So, because if you have those withholding tax exemptions, then again, back to cash flows being our biggest asset, no one is going to withhold from you because you're exempted. URA has seen that you're fit to be exempted. Many of us are importers. When we import machinery, we can actually get VAT deferment, and you don't pay that VAT. But some of us are struggling, and you're not able to claim this right of yours. See how that goes back to your cash flows again. Then also, many times we disagree with the authority. Many times people have gone to court, up to the high courts and Supreme Court even now, because of disagreements with a technical aspect of the law. And so it is your right for the start, before we even talk about TAT and all, to apply for your objection. Look at the reason. Talk to your consultant or someone. Talk to your consultant or anyone and see what are the reasons for URA. If the reason is under declaration, and honestly, you can see that you're under declaring, don't waste your time going to URA, because really you have underdeclared. But if it's really something you're sure of, you have your support. And again, this takes me back to record keeping. The reason why many of us are not even able to go for objection through the objection process is because you don't have records. So you have a very good story, it is believable, but you don't have the records. And for me, I believe that is where we all get it wrong. They ask you for bank statements. Then some of us, we use the company bank account for personal things. You're going for a personal trip. So when they ask for bank statement, you're thinking, I can't show them this stuff. Let me just see a way around this situation. So let's respect the business. Let's run it the way it should run. Pay yourselves the salary that you want to earn, and live the life that you want to live. Finally, of course, BDO is here to support you any day, every day, because we have in-house consultants who do all this stuff, be it mergers, advisory, be it restructuring, health checks, audits, business outsourcing. For those of you who can't afford an in-house CFO, we can do that for you. And I am happy to respond to questions. I hope it's been fruitful. It's been a good 30 minutes. I hope it's not an overload of knowledge. We shall share these slides with you for those who've been asking for them. Thank you very much. Okay. I think the next slide has the contacts for those. Yes. So thank you very much, ladies. Thank you, Rose.
Wow. Thank you so much, Pamela. I want to believe that everybody who is watching is transfixed, because you have touched the real pain points that we as business people experience. And so there are many questions, but I just wanted to underscore some of the important things that you have talked about, Pamela. I think that knowledge is power. Certainly knowledge is power, because even the Bible for Christians says, my people perish because of lack of knowledge. Many of the mistakes that we are making with taxes is because we don't have knowledge. And so, Pamela, we want to appreciate you so much for coming to give us knowledge. You've emphasized the importance of tax planning, because when we plan for our taxes, then we're able to actually utilize all the benefits within the law, to make it easier for us to pay taxes. And so there's what we call tax avoidance and not tax evasion. So I think that this is important, planning for our taxes. You also talked about the costs. You've highlighted the costs of non-compliance. My goodness. And like you said, URA today is tightening the way they do business. They're actually, making sure that we are all aligned. And I like that somebody put a comment in the chat group that it is time now for SMEs to to come away from under the table and come on top of the table, do things on top of, in other words, formalize the way we do our things. Then I also think that you've emphasized the need for us as SMEs to have tax consultants. And they're not necessarily all expensive. They are consultants who can meet us at our different stages of our businesses. And I'm happy that we have many who have also signed up here who are watching this session. So we need to begin to put away some small money to pay the experts who understand, because there's so many taxes. There's VAT, there's pay as you earn, there's withholding tax and everything that Pamela has talked about. Then, of course, keeping our records. We must keep our records. There's no two ways to that. We must keep our accounts clear. We must keep our records clear. And so I would like now, Pamela, you to read out some of the questions and you answer some of the questions. We'll take one batch and then again read up. There's so many questions in the chat room. Pamela, you're still on?
Yes, I am.
Okay, so the first question I'll take is from Paul Nwagaba. He says, I recently filed a final return for the first time, and what I intended to show as taxable income was instead treated as a tax liability, and URA is demanding for it. The tax liability is way above my capacity. Could I have made a mistake in my return? What should I do? Please advise. Pamela, that is a real, a real issue. The second one is, what is the threshold? That is Jen Awol is saying, what is the threshold to withhold tax from a supplier? And that is linked to what Dennis Kizito is saying. I am supposed to withhold without being notified by URA. Won't the suppliers challenge me?
Can I respond to those first?
Can we I want to take about five, then we.
Okay.
Can I? Yeah, let me add you two more. And then Sendege Alex is saying, if a director is solely employed by a single company and the company files pay as you earn, is the director required to file a tax return, or the pay as you earn filed by the company is enough? And then related to that, finally, is Francis Kalibala saying, is it mandatory to make provisional returns for employment income? And maybe even Janelle Nachibuka is saying, what if I don't earn as a director? That is linked to the Sendege question. If as a director I don't earn, what happens? Do I still have to file returns? Okay, so let's have you answer that, and then we shall take another batch. Thank you.
So the gentleman who filed a final return, but URA is demanding much more than they filed, chances are the return was filed wrong. So you would need to have someone look at it, because sometimes when you're panicking, yeah, you can make mistakes. Everyone makes mistakes. And so I would advise that he gets someone to look at it for a second opinion, because from the URA's side, they are probably, you could have added an extra zero while you were filing. So for me, I think for that one, you would need to have someone look at it. It's not something I can answer now. And then another person asked for, I'm sorry, I was trying to get a pen, but I'm getting this from my head now. I hope my memory will not disappoint me. So the other lady, there's a lady who was asking about the threshold for withholding. So when it comes to professional fees, even when you're paying 500,000, you have to withhold on professional fees. But when it comes to goods and other services, it is for only people who are withholding agents. And maybe let me, URA issued a practice note where they defined a professional. A professional is someone who has to go to school to do what they do. So you can see how vague that is. Like, Yeah. So you can imagine how many services in your expense lines could fall under professional services. Then the threshold for filing withholding for accounting for withholding tax, 1 million or anything greater than 1 million, or in aggregate. Let me bring it home. If you have a contract with a food person, and that food person over the period will hit the 1 million mark, we consider the contract value. So even if they give you an invoice of 500,000, and you are withholding agent, you should withhold on it, because in the bigger scheme of things, you're actually going to be paying them more than 1 million during the period. So then the other bit was about
Dennis was saying
not
yes.
notifying you that you have to withhold. Now that is what I explained. URA actually releases the list for starters. So the list is out there for the public, signed, and on all social media. It's even on their portal. Then they go ahead and send you an email. Okay? But what happens is many of us give our email addresses or even put our consultant's number or email, and we don't want to know. So your consultant sees they're busy, they brush it off. 1 month goes down the road, 1 year. Now they're asking you, you've been paying all these people. How come you've not been accounting for WHT? And so URA notifies you. That is, so URA notifies you and notifies all clients. They even go ahead lately to amend your registration details to include withholding tax. So yes, you just need to keep track of and take emails from e-services very seriously. Was there another one?
Yeah, there was, if as a director of a sole employed by a single company, and the company files pay as you earn, is the director required to file a tax return, or the payee filed by the company is enough?
So the payee filed by the company is enough. But if, so you don't have to file. I think I've answered that bit of the question. However, it takes me back to registration. If you registered and put yourself, and your source of income is not employment, but business, URA now expects you to file and tell them, from your business, how much are you earning? That's why you'll find people who are saying that, I'm just an employee, but URA sends me these messages. I don't understand why. Then before you know it, your ledger has all sorts of assessments, all manner of assessments. Why? Because you registered it wrong. I hope I've answered that one, Rose.
Yes, you have. And so there's another question. If you are just, I think the last one was, is it mandatory to make provisional returns for employment income? And if you're registering for a TIN number, but you have some informal business, or you want to buy something and the TIN is required, which source of income do you put while applying for the TIN number?
Okay. So first of all, you're getting a TIN to acquire property, which means that in essence, you are either employed or in business, because then how are you acquiring this property? However, I have seen situations, special situations where, say for returning students who are not employed, but are required to have a TIN for purposes of bringing in their property. So for such cases, URA will give you a TIN. But then in other cases, so what are you earning? Like you want to buy a car, but you don't have a source of income. That raises questions even on my end, like how are you buying this car? First. So these are things you need to think about. If you have answers to them, I have had people who say, I'm a housewife, my husband gives me this, that, so I just want money I just want a teen to transfer the car into my names. If you can prove that, then that's okay. I'm sure URA, if they have evidence that you're not working and you're not contributing to the national basket, they would, it's a case that can be argued with URA.
Okay, let's take another set of questions. Okay. Is it mandatory for all workers to belong to Nssf? I've had workers who do not want to belong to Nssf due to past history of failure to get their benefits from Nssf. That's from Christine. And then Okello wants to understand what Ifri is in full and under what law. And Bella Simwe wants to know more about the exempt and non-exempt suppliers. What do you mean? And Monica is saying, so is it better for SMEs to have consultants versus full-time employees to reduce the tax burden and compliance cost? So if a consultant earns above 150 million, does VAT apply? I think you'll take those. Fred Cassidy just said, I see one route. SMEs need to get to the table. Stop operations below the table. Compliance is the only route here. This is well put, Fred Cassidy. I think that this is the essence of this talk today, that we need to put an end to under the table operations. Let's go get knowledge. Let's plan, let's pay where we can, and just get the experts to guide us, because I think that we can no longer continue doing business the way we used to do. Over to you, Pamela. You can respond to those.
Thank you, Ross. So is every worker? Yes, it is mandatory. It is a mandatory fund as long as you are employed and you are. But then there's people in the informal sector. In the amendment of 2021, people are allowed to actually increase their savings also. So if you're contributing 5%, you can tell your employer to now put 10% contribution for you from your salary, because now they allow voluntary registration. So yes, I think the question was, are all workers supposed to register for Nssf? Yes. Then and the other one was, what's Ifri in full and what is the law? So Ifri is electro fiscal receipting and invoicing system, electronic fiscal receipting and invoicing system. It is under the VAT law, and it was introduced by URA, I think 2020, but mandatory onboarding was 2021. And everyone who is VAT registered is supposed to register for Ifris. Then the other was a consultant. Is it cheaper? Of course, if you have a consultant, there's some costs you don't incur. Like, you do not have to give them tools of work. You just get what you need from them, and you're not giving them, say, medical insurance. If you have an in-house policy for medical insurance, you don't have to. All you need is bargain for the service, know the cost, and that's it. Then if a consultant is earning more than 150 million in a year, should they register for VAT? Yes. Consultants should register for VAT if they're earning more than 150 million a year, because it is not an exempt supply, it is a taxable supply. And it's taxed at 18%. So for all consultants here who are earning more than 150 million, please do not be the first to get into the URA's net. Then exempt and non-exempt supplies. Someone wanted to know, what are they? So URA has a list in the second schedule of the VAT Act that stipulates in clear terms what is exempt. Financial services. It even goes ahead to explain what is it. So if your supply falls within the second schedule of the VAT Act, you are exempt. You're not supposed to. But if it falls outside, if it's not mentioned anywhere in the second schedule, and it is either the third schedule, zero rated products, goods and services, or not mentioned at all, then you are standard rated. So it's either 18, 0, or exempt. Yeah. That was it?
Okay. Yes, I think that's that batch. Can I, we can take on another set of questions as we come to, and as we bring this to a close. And so Kara Moding is sharing here. We were given a penalty by KCCA for making a payment for local service tax on 2nd November last year. We have been doing a lump sum deduction in October, then make a payment in November. Please enlighten us on the payment dates for local service tax. And Sarah Chiyinji is saying, when I'm declaring income as an individual, am I expected to declare costs / expenses such as school fees, donations to churches like tithes, medical bills for my family, parents, etc.? So what costs do I capture in that declaration? Monica Kavuma, I think, is just confirming that she can attest to a ruling where URA turned back on their advice and charged back taxes. They assessed back taxes and we contested it. Took long to resolve, but court ruled in our favor. So the lesson she's sharing is when you know your taxes, it pays off when you least expect, I think, URA to pounce on you. Again, Monica, I think those are the questions. Monica made another comment. True, on withholding tax exemption, easy process when you are compliant. So compliance is very important. I have benefited from this at my workplace, and it was a saving grace for our cash flows, especially during COVID period. So I think she's just underscoring the importance of compliance. We need to be compliant. We need to keep records. We need to be on top of our game. And so I think that you can, those are the questions that I see now. You can handle those as we bring this to a close.
So LST, I mentioned that we pay this in 4 installments in the first 4 months of the year. So 2nd November was after the first 4 months of the year, of the financial year. That is July, August, September, October. So you paid on 2nd November. That was late, and that is why you were penalized. So July, October, you can pay in a lump sum. You can pay in 4 installments, 2 installments. Just make sure that by October, you're done. Then, what was the other one, Rose?
I've gone to the next. Let me give you some more questions then.
Okay.
Brian is saying, please expound more on cash basis accounting and how to apply for it. And Dennis Chiatale says, how can you explain a situation where a business that is VAT registered can compete with other businesses that don't charge VAT because their prices will be down and hence be kicked out of business? Edwin Turiam Hachi is feeling very sad and saying it is sad that it feels like starting a business is actually opening it for government. We get no support from URA, but they expect so much. Some consultants are more expensive than the tax we have to pay. We need more education from URA. They onboard us on systems without proper education and expect us to comply. That's true. And that's why part of what we are doing today is to support URA so as to make it easier for you. And so this is part of what we're doing. But yes, I think this is worth noting. And again, we shall give that feedback with URA as they continue to sensitize the business community about taxes. Yeah, I think that will take. What happens if I fail to make an objection on unclear assessment in time? Can I still object much later? That is Brian Semakula. I think we'll end with those. So Pamela, you can respond to those. Yes.
Cash basis accounting is you only account for the VAT when you receive payment. So when you have not been paid, so the default is you account for it on the invoice date, payment date, or receipt of services, whichever comes first. But when it comes to cash accounting, then you only declare it when you receive the money from your customers. And they've done that for people who are supplying government projects effective this year. And because government takes long to pay and these suppliers have been suffering over time still because they are not exercising their right. So they are saying that for government supplies, we shall allow you to claim, to declare them as and when government pays you. So cash accounting is really when you get money, then you declare in the VAT. If you haven't received money, then you don't have to declare it in the VAT because you're not using the accrual basis. How do you apply for it? You just notify URA. It is your right. So the law does not put in place an application process or make it even. It is your right. As long as you have you're within the ambits of using it. Like if you fulfill the conditions of using that cash accounting, which is I think sales below 500 million, then you can use it. You just notify URA right to them and tell them, oh, I'm going to start using cash accounting. You don't have to do anything to the return because there's really nothing formal. Then how do you compete with people who are who are not VAT registered, and yet you are VAT registered? Okay, so usually I don't see this unless you are a final consumer, you're selling to final consumers. But usually this is not an additional cost. And you will find, because you can claim it. So your customers can claim this amount. So at the end of that day, they've actually paid the same amount. Like in essence, they have paid the same amount as they would have paid at the other point. Only this time, they're claiming it against their output. I don't know if that makes sense. So the only time that product will be more expensive is if you are selling to a non-registered person or to an exempt person because they can't claim that input. So yeah, I see a bit of a disadvantage there, but VAT has its benefits as well. Then someone is talking about how consultants can be more expensive. So I think I have mentioned this. Pick interest in your business. Many of us are not interested in our businesses. So pick interest in it. Know what the tax consultant is doing. Many of us SMEs just get the money. The consultant tells you, give me 50 million. That is what I'll use for all your things. You give 50 million, you sit back. Meanwhile, the taxes on this is probably 5. You don't even know. So they've charged you 45 million, just like that. You don't know, you don't read any e-services emails. You're not interested, or you're so scared to read emails from URA. So pick interest. When they're filing your return, understand, why are they adding this back? Why are they removing this? You get, so that you don't, over time, you may be able to do it yourself because you understand your business better. Then someone talked about school fees, donations to the church, tithe. People, those are not business expenses. So we add them back unless you're giving to an exempt charity organization. And those ones are listed very clearly in the law. So if those are the drawings, so those will be considered payments. I don't know what you would call them, dividends, salary, and they are taxable. So all this tithe, you're giving to your community some money. You see, even the people who gave us money for COVID, they didn't get that exemption. They were taxed on that money.
What?
So for you now who is giving tithe to your church really of your business money, you're going to be taxed on it. So you need to know. Then
Pamela, that
yes,
particular
please.
question, Sarah was saying, if I'm declaring income as an individual, that's when she was asking whether she should be declaring the tithe and school fees, medical bills. So is it the same for individual as a company?
First of all, individuals so depends. If you're an individual, you have the threshold of 2.8. 20 million, which is sad, given the inflation. So you see, those are things that we need to keep moving, increasing this threshold. And I think SMEs are a good place to start. So the threshold for the year for an individual is 2.8. So now after that, the other bands, 10%, 20, 30, apply. And if now the money that you're declaring as an individual is more than 12 million per month, that is 120 million a year, you move into the bigger bracket of 40% even. You get. So for individuals, you don't have to go through, it is clear. 20. And also, if I am working at BDO and they pay me, then I get a salary from MCOPA, they pay me. I need to choose a primary employer. And if my primary employer is BDO, then BDO will go through the bands. Everyone else after that, taxes me in the next band. I don't enjoy that 2.8 anymore. So if you have salaries from 5 companies, just one will give you the 2.8 because you're entitled to just one. And then after that, the bands. Yes, so I felt that was very important because I have found that many employers will continue to give because they're used to their payroll and all, they'll continue to give that 2.8. When you are starts to analyze per employee, that is really something that will get you into trouble.
Okay. All right. I think that you've responded to all the questions. And as we bring this to a close, this has been an excellent, very eye-opening, very sobering presentation that you've shared this morning, Pamela, and we appreciate that. Definitely, what you have emphasized here is the formalization of what we do, the importance of seeking expert advice. I think that there's so much. This sounds very simple to you, Pamela, because that's your area. But for many business people, given that there are many areas that we have to we are concerned about as business owners, the tax aspect becomes it's quite technical sometimes. And so I think that what you've emphasized here is the need to seek expert advice. And I am glad that you've promised to keep sharing information updates with all the members here. We'll share you'll have access to their emails. However, I also want to urge our business people, do come in or call us as Enterprise Uganda, and we're able to link you to know the different tax consultants, and you'll find one who fits within your budget. Yeah. But also online here, I've seen so many experts, tax advisors online. So again, the networking is important. Scroll through and see whom you can talk, because this discussion, the conversation must continue. But also I'm sure Pamela is available to still to guide you because some of the issues here are very specific, especially the issue of somebody who is having an issue with URA. I think that you need to continue this conversation with Pamela, or you can get back to us and we see how you can support. We don't want to have any SMEs suffering because they don't understand tax issues or they fell into whatever trap. What we are saying now, compliance is key. We need to formalize, we need to organize ourselves and begin to walk the journey of compliance, or else URA will still catch up with us, and the penalties are totally prohibitive, as we have learned. And so, Pamela, thank you so much. We truly appreciate your sharing. You really demonstrated a robust understanding of the tax issues, and I would like to urge our members to, whenever they can, to get in touch with you. But also, we'll be sharing the presentations like we always do. You can get us, or you can get the link on our YouTube page, or we will email to you. Since you're now signed up, all of you are going to receive the recording of this presentation, but also previous presentations. And so once again, I think I now want to bring this to a close, to thank every member for making this good choice to be with us this morning. And I hope that you've, yes?
Just a second. Someone asked about objection. I see it here. And I wanted to just let them know that if your objection is out of time, you have a window to ask for extension. However, after that window has been given, if you do not object within that time, you just may be caught by the deadlines. Yeah, by the deadline. So yes, you can ask for. Then the other thing, SMEs, you know how business is in Uganda. We give people commissions because they are going to give us business. We basically pay them to give us money. So that money is commission. And commission really needs, like, you can't explain it. So it's a risk, a big risk, unfortunately, that the SME will bear and not the other person. Because usually you can't even declare it in WHT as a commission because the person will not give you their TIN. And you don't even want to talk about it because it is an arrangement between the two of you. So that is a risk. And for me, I think with compliance, SMEs can get bigger and better business without having to do all those things, because their papers and their work will be speaking for them. Thank you. That's all. Thank you. Over to you, Rose. Sorry.
All right. Thank you. Thank you for clarifying. But yeah, that's a big one. The issue of commission, I don't know whether bribes fall in that category, but that is big. This is a cost to a business which can't be declared. And how we pray that, we rid this country of this whole commission and corruption business, because we know practically to get to supply, to get business, you have to factor in that. And yet this is not provided for when we come to filing our returns. But so now that we know, we need to know how to go about that and know if you're paying commission, minimize it. If you pay a lot of it, it's a cost to the business and you cannot recover that. It must be taxed. Okay, so I think that I now would like to, if you allow, to bring this to a close. Thank you very much, Pamela, for this very, very insightful presentation.